Welcome to another episode of Figure It Out. Today, we are going to talk all about finances, how you can manage your finances, how you can invest for a better future, or simply how to become an equity researcher. For that, I have a very good friend slash cousin of mine, Aman. I
Hi.
am welcome to the show. So just quickly jumping into it, you want to run through your credentials, like what are you doing, what you've studied, etc.
So I work as an assistant portfolio manager at an Indian fund,
Okay.
and I've been doing this for 8 years now.
Mm-hmm.
I started as an equity analyst at a research house, and then I moved towards funds.
Okay.
And the what I have done before that is I'm a chartered accountant. I've done my CFA course
Okay.
and BCom, etc.
Yeah. The
And
usual thing, BCom करके CA करना
yeah,
है.
yeah. So
So
BCom is, I was in the same college as you. BCom was basically let's go to the college where you don't have to go to college.
yeah, true. I mean, it's funny, right? The education doesn't teach you for stepping out into the world, I feel.
No, I mean it doesn't. It's very. I don't know how to put it. It's in a way the education system is designed by people who don't know how the real world works.
Or maybe they
And
don't want you to know how the real world works.
no, I think they don't know themselves because if they knew themselves, they wouldn't be designing these kind of things. I just feel it's very bookish and there is no update pattern. It takes 20, 30 years to update certain things. And this
Mm-hmm.
is what I found when I was studying for CA and I was giving BCom exams.
Okay.
That things which were done and dusted in CA were
Mm-hmm.
still being taught in BCom because 5, 7 year old amendments which weren't taken into account.
Okay.
So what our teachers used to say at our coaching classes was, "This is BCom portion, this is CA portion. ये सवाल पूछा तो BCom में ये आंसर देना है, CA में ये आंसर देना है."
Seriously?
Yeah, because they don't update their books. See, the tax laws change every year in this country.
Absolutely,
The
yeah.
BCom books don't change every year in this country.
But they should, right?
They should, but they don't.
Fair. So, I mean, so what you're saying is you learned by, on the go. You learned on the job, right? So, do you want to talk about that? Like, how was it? Like, what did you do? And how, like, you fell, you learned, and what are the mistakes you did, and how did you learn?
Yeah, see, the thing about doing a course like CA is you don't go to college. You don't really
Correct.
have a atmosphere where you're staying in a hostel. People are teaching you things. It's largely self-study. You do go to your, coaching classes, etc. But they
Mm-hmm.
are teaching you to pass an exam. They're not imparting education for you. They're telling
Fair.
you these are the kind of things that can come. They make their own curriculum. Some of the things that the CA institute wants you to focus on, they don't focus on because even if it comes in the exam, it doesn't have that kind of weightage. You can leave these things. So when you're studying for CA, it's largely self-study. It's a very isolating course that way because what you're doing is waking up at 7 every morning, going to classes 5 hours, then going to work because you have to do 3 years of articleship, and then you come back at
When
night.
do you rest?
You don't rest. I mean, that's why you do it when you're like 18, 19 years of age. You come
Yeah.
back home at 8, 9, and then you study for 2 hours because next day again you have to go to classes. And then if you
Insane.
think weekends are free, weekends are 9 hour classes. You go in the morning, you come back, and they give you weekend at zyada homework. So that's how it
ये इंसान तो
functions.
फ्री है इसको और बिजी कर दो.
Yeah. So you can't really make any friends.
Mm.
It's a very isolating course. People are in different areas of CA because there'll be a first year student, third year student in terms of when they're supposed to give their final.
Mm-hmm.
So you don't really have that peer group which you have in other courses.
But you might be having a peer group within that fraternity, right?
Yeah.
I mean, because you must be discussing what are the new updates, what are the happenings. You must be learning through your fraternity a lot, right?
Yeah.
Also, just a question, like when you're talking about you were learning, you were studying for CA, either different answer, either different answer. So when you were studying for CA, was it just to do you study to just pass the exam to or to actually prepare yourself for the real world?
I don't think anyone studies in the CA exam to prepare for the real world because people don't know what the real world looks like. See, the issue is when decisions are taken and how they are taken.
Okay.
You have to take the decision to become a CA at the age of 17 after you pass your 12th exams. Your entrance exam comes 3 months later. I mean, at the age of 17, 18, taking that big a decision, I don't think is warranted or anyone can make it.
Fair.
And I can't really fault anyone for making the wrong decision at that point in
Absolutely.
time. And the correctness of that decision is also only known in hindsight.
A lot of people have left CA in their final years or
Yeah.
like the final exam they don't give it because they realize CA is not for me.
Yes.
It's ideally because of that. At 17, you don't realize that whether or not you want it.
See, I think just speaking about the CA course, I think there is an issue with people's expectations and the realities of the CA course. How I generally define it is that there is a risk reward in everything you do.
Correct.
So with CA, the risk is this much and the reward is this much.
Okay.
People do not understand this because there's another equation that comes into CA is the reward to respect ratio. because the
Yeah.
reward is here, but the respect is here. So you believe when you meet a CA at the age of 17, 18,
Hmm.
and I am from North India, right, originally. And when I go to North India and I meet CA, the amount of respect they have is
Hmm.
more than most politicians, etc., will have. That this guy has finished CA in his first attempt is basically a unicorn.
Yeah.
And that kind of respect doesn't really translate in the job market. It doesn't translate to
It
your
doesn't
skills.
care. It doesn't matter whether you've cleared it all in first attempt or not or anything, right?
It
When you.
matters for the job you want,
Hmm.
but again, this is not something that people know. They don't understand the kind of probability that is needed to finish everything in one attempt, because the number of people who come into the CA course versus the number who come out every year, it's a huge mismatch.
Hmm.
So see, any course you do, there should not be a fatality rate, because you
Right.
get into a course, you do BCom, you do MBA, you do
Yeah.
even your MPhils.
Yeah.
Most of the people are going to come out with that degree.
Correct.
That is not the case for this course, and
Right.
that is something people don't really know.
Yeah.
And I think at the age of 17, 18, that kind of guidance is needed for a
Hmm.
young budding chartered accountant
Hmm.
as to getting what is the mathematics of this, why should you be doing this course, and
Correct.
what kind of person should be doing this course. And I've always told people, whenever people ask me, should I do CA? My
Hmm.
base answer is no. And then I ask them, why do you want to do CA? Because they generally
Yeah.
want to do CA to make a good life.
Yeah.
And ideally, you should be choosing the path of least resistance or the easiest path to get
Hmm.
where you want to get. Because there's no point in taking the harder road to, an easy place.
Yeah. I think you mentioned that, at the age of 17, 18, there needs to be a guidance for doing something that's this big, like this bigger decision in your life. So ideally, someone should pick out a mentor, preferably in the same field, and get to know the why. The why is important. Why do you want to do it? If you know the end game, I think the path becomes a lot easier, right? So moving on, like CA didn't really prepare you for the real world. So how did you prepare yourself or learn yourself was the question. Like, how do you learn on the job?
See, I think you have to understand what preparing for the real world means, maybe, because if you look at the CA course, it does
Mm.
prepare you for the real world a bit too soon, because you do 3 years of articleship, which you don't do in other courses.
Right.
The issue is you're already too deep into the course to do anything about it.
Okay.
Once you start an articleship, means you've cleared 2 levels of CA.
Mhm.
That means you're deep into the course. At
Yeah.
that point in time, you will not take the call that I'm not going to do this, because you
Mm.
do 3 years of work, and 3 years of work which you didn't expect you'd be doing,
Right.
because the life of a CA is very tough. What you're doing is looking at balance sheets, looking at profit and loss accounts, and ascertaining whether all these transactions are correct. It's a very cumbersome job.
Yeah.
It's very difficult to do 100% audit. That's why you do, testing of, you pick random samples and you test. The other side is taxation. It depends on how much tax people want to pay really in India. You can't really check everything properly. This is
Yeah.
not, the system is getting much better now, but still it's a very cash based system.
Mm.
So those kind of things don't really, when you're in articleship first year, it's a rude shock to you as to where you are,
Yeah.
in the basically the
It's a rude
hierarchy,
awakening.
where you are in the hierarchy.
Yeah.
Like the only thing that I used to look forward to, and all the people I work with used to look forward to, is going on audit, because we could get free lunch, right? Because you're paid $7,000 a month for 3 years, and you're
Insane.
working, 8-10 hours a day, which is a
You're
full
doing a
time job.
full-time job basically, and you're just getting paid 7,000.
Yes, but you're going to classes, you're trying to
Yeah.
study for your exams, and you have to take 6 months off to pass the final exam. It's a very cumbersome course. People just need better guidance on whether they should do it. I'll just give you a quick analogy. There are 12,000 people on an
Okay.
average, 12 to 15,000 people who pass CA final every year.
Okay.
And there are 12,000 to 13,000 seats in the top 50 business schools in India who pass out and become MBAs every year.
Okay.
The average salary of the MBA is higher than the average salary of the CA.
Okay.
If a lot of CAs know this at the age of 17, 18, they would not get into CA.
Yeah.
And I
Absolutely.
think that kind of guidance is just needed. And why it's not given is because no CA tells you not to do CA, and no MBA tells you not to do MBA.
Yeah.
A proper
True.
guidance counselor is tough to find.
Yeah.
And
A
that's why I feel,
non-biased. When you say proper, it's a non-biased person who has a neutral point of view and who can tell you exactly, okay, yeah, what you need to know.
see, a lot of people don't really think about the paths they did not take,
Yeah.
because they're happy with the path they took. If you're a first attempt CA, there's no reason for you to think what would have happened if I didn't do CA, because you've done it.
Yeah.
And
Also, sometimes you're too far now to think that ke ye hota to kaisa hota, because you've passed that age now. You're not going to restart at 22 or 23 again.
yeah, and being self-critical is not easy. It comes
Yeah.
later in life.
Yeah.
I mean,
At the age of 30, you realize ye kar sakte the, wo kar
yes,
sakte
because
the.
and that generally happens when you look at other people who've done something.
So, So 3 years in the articleship, you were going on site for audits and other things, and it was a rude awakening to you. You realized this is there. So basically, what you're saying is you learned on the job by being with people, learning from your fraternity. Is that what it is?
Yeah, because see, when you're doing the articleship, you're thrust into a place you don't know what you're supposed to do.
Yeah.
So you have to learn on the job. And I think that's a great thing about the CA course. You learn on the job, you become resourceful, you are given a task and you do the task. And you are prepared for the real world. In that way. You're prepared for the job market. Maybe not the needs of the job market, but what you're supposed to do in the job market.
Fair.
If I join a company, the boss tells me to do something, I have to do it and give it to him.
Correct.
It is on me to figure out how to do it.
Yeah.
I don't need to ask 100 questions how to do this. And I think that is the only thing where I feel the CA course has an edge over, the traditional MBA type courses.
It's preparing you for the real world.
Yes.
The self-initiativeness, basically.
Yes.
Interesting. That's a different way to look at it than most.
Yeah, because now I hire people. And we were hiring only MBAs when I joined.
Yeah.
And we are now hiring both MBAs and CAs. And now we are seeing that there is a difference in work ethic. Again, work ethic does not mean the quality will be better. But if you have good work ethic, means there is a good building block to start from. Because you can't really judge what people say just by interviews. You can't know whether the guy will be a good worker or bad worker.
Engineers are also getting everywhere. That way.
Yeah. I mean, see, that's the issue with the finance industry at this point in time.
Yeah.
9 out of 10 people are engineers who have done 2 years in finance. And they are,
finance is not their major course. It's just something that they did after their engineering.
Yes.
And they think they're good at it. I'm hoping that they're good at it, because if 9 out of 10 people are engineers in finance companies, I'm hoping they're good.
You see, they're smart people, obviously. Engineers are smart people.
Logical, the
they're
problem
very
solution,
logical people. The issue is they don't have enough exposure to finance. 2 years is not enough exposure to finance to be working in any sort of decision-making role in the finance industry. If you compare that to a chartered accountant or even a BCom, he studied accountancy, financial management, etc. in his BCom. Now he's studying his MBA. A CA knows everything inside out. You ask him a question, he will know the answer, because it's intuitively he knows it, because he's worked for 3 years. He studied.
It's like a second nature to that person.
Yes.
Because you've studied so much, it gets hardwired into your brain.
Yes, and that takes time for MBAs, and that's for engineers, and that's why I feel that engineers are lacking a bit. That's what we are finding when we make hiring decisions.
What's the ratio of engineers in your company?
I mean, we don't have any engineers now.
Wow.
We are only hiring CAs now, and that is not my decision. It's the company's decision. And all of them are only MBAs.
Insane. Yeah. So moving on, like what exactly is your current role?
So what we do is, so how mutual funds work is, an individual investor like you or me can put anything ranging from 100 rupees to 10 crore rupees with an AMC, which is an asset management company.
Correct.
They will put it in a mutual fund scheme where that money goes into the pool. They buy everything. They give you a NAV. NAV is the net asset value of the assets you have. So if you put 1 crore, your NAV on day one will be 1 crore. Then they will put it into different shares. It's a pooled account. So you don't hold shares, the AMC holds shares.
Right.
And then they invest that money, it grows, and then maybe 10 years later, you remove that money or it matures, you take it out. That's how mutual fund works.
So basically in mutual funds, I'm giving the money to an AMC and it becomes their money on a temporary basis, and they invest it on your behalf.
Yes.
And they make an X amount of profit, and on that percentage of profit, you get an X percentage.
Yes.
That's how
it's not a percentage of profit. They charge on the basis of the amount you've kept with them. So they will charge 1% of, if you've kept 1 crore, they'll charge you 1 lakh rupees for the year. Annually, they'll charge you a fee. It differs with different AMCs.
Right.
But that's broadly what happens in a mutual fund. What I do is I work for a portfolio management service. Now, this is a SEBI thing where what happens is that investors who want more bespoke products or who want access to fund managers who they think are better.
Yeah.
So they have this PMS license, it's called the Portfolio Management Service. What happens is a customer comes to me. SEBI has mandated that the minimum amount to invest is 50 lakh rupees. 50 lakh and above, he can give to me. I will open a bank account for him. I will open a demat account for him. I will take power of attorney from him, and I will invest on his behalf.
So that money, basically whatever he gives,
stays with him. He can take it out anytime. He can cancel the power of attorney and take the money back anytime.
Interesting.
So it's a bespoke product where I am investing for him. He can know what I've bought, what I've sold, because he will get the SMS of what I've bought, what I've sold at all times.
So basically the bank account is sort of an escrow.
Yes, you can say it's like that. Basically, he's giving me a power of attorney on an existing bank account and on his
The
demat
account
account.
and everything is in under his name only.
Yes,
It's
yes,
just him giving you the authority to use that money, which
yes,
he's kept separately in a common account, I would say.
yes. He's mandating me to
Yeah,
use that money for him.
interesting.
So, like the AMC, I am also a fiduciary, but I
Okay,
am working with only high net worth individuals with
right.
whom I have decided this is how we invest.
Hmm.
We come to an agreement of how we invest,
It
and
must
we
be
put that
exhausting
in
to
the
talk to these people, right? Figuring out exactly the returns that they want.
yeah. So what happens is it depends on how you do it. How we do it is we have one scheme, and
Okay.
we go with them. We go to them and say, "This is our scheme. This is how we invest.
Mm-hmm.
These are our return expectations."
Mm-hmm.
And on that basis, you have to give a certain amount of money if you're comfortable.
Mm.
And we don't really make changes depending on what a client wants. So we run it like a mutual fund in that way that we
Okay.
will buy it similar for everyone.
Mm.
But when you buy a mutual fund, any mutual fund scheme, you will have 30, 40, 50 shares they have bought.
Yeah.
We will have 10 to 15. So we will be
Okay.
more concentrated because we believe these are going to create great wealth.
It's
Yeah.
just very few, very selective, very targeted ones.
Yes.
So your research would be bang on.
It has to be bang on.
Yeah.
Otherwise, we can shut shop and go home because the
Yeah.
Indian market is a high yielding market. Anyone
Okay.
can make money in the Indian market because the
Interesting.
Nifty itself makes so much money.
Yeah.
So we have to always be on our game. If you're not on our game, we'll go out of business.
Let's talk about how an individual can earn money, prepping them for the future investments. How can they go about planning their whole, like say, I earn say 1 lakh rupee a month. How much should I invest? What percentage should I invest? Where should I invest? How can I track my, stocks which all to buy? Like in a whole circle.
Sure. I think the thing with investment is if you're young, this is the question I get asked, what is the percentage of salary I should be investing? The
Yeah.
answer is as much as you can.
Okay.
If you were to ask me a percentage, I would honestly say more than 50%. It's very simple. The math works out very well because the main thing with investment is time. The more
Okay.
time you give your investment, the more that investment grows. So
Mhm.
just to give you an example, and this is math everyone would know, I'm guessing, but it makes the point very well. If you invest 1 lakh rupees today, if you get a 15% return, which most mutual funds in India will get you over a period of 10 years, at the end of 10 years, that money will be 4 lakh rupees.
Right.
Now, if it's invested again for a period of 10 years, that's 16 lakh rupees. And at the end of 30 years, that's 64 lakh rupees. Now, but if you invest 50 lakh at the end of 30 years, it will grow at the same amount. But this 1 lakh rupees which you've invested has grown so much. So the amount of investments you make at the start of your career, even though you have to sacrifice certain lifestyle choices, maybe you don't go abroad, you take a vacation here, those kind of things, if you do, it really helps you become financially secure much earlier in life. And when that happens, you have a lot of decision making capacity, which people do not have. Most people who can't quit their job when they want to is because they have certain responsibilities on them.
Correct.
They have an EMI running, they have kids in school, etc., etc.
Yeah.
But these things can be avoided at the age of 40 if you start investing a good amount of money at the age of 22. Because when you have a few crores in your bank account, these things don't really matter to you. You will do what you want.
Yeah.
And I think
It's
that's
easier to
why,
be happy when you have money.
yes. So I think this math people need to understand. And 15% is a number I'm saying you can easily outdo that. I think in the Indian market, it may be a bit controversial to say because most people, tell you to invest in very safe businesses, etc. But you can easily outdo a 15% number if you find a good fund manager. And I think that's where people should be focusing on, that a certain part of my salary is not mine. If you start behaving like that, 20 years down the line, you will have the freedom to make choices. And that is a trade anyone would make at the age of 40.
Yeah. I think a question over here, like, you're talking about, say, okay, next percentage, whatever it is, how much ever you can spare. Fair, amazing. Now, where do I invest? And how do I go about actually figuring out where, okay, I need to invest in a mutual fund, or do I go out directly into the market? How do I make that decision?
See, it depends on your background, but I think no matter your background, your first avenue of investment has to be a mutual fund or an index fund.
Okay.
You have to see
What's
that
an
money
index
grow.
fund?
So an index fund is like a mutual fund, but the amount of fees they charge, I was telling you, is 1% for some. It's going to be much lower for them.
Okay.
So for example, the Nifty 50 is an index. The Sensex is an index. The Nifty 50 has 50 Indian companies. Sensex has 30 Indian companies.
Correct.
If you invest in an index fund, the index fund directly buys those 50 in the same proportion for you.
Got it.
Versus if you put it in a mutual fund, the fund manager decides where he wants to allocate, where money will be made.
Got it.
Long term, Fund managers have outperformed by a small margin, but a good fund manager outperforms by a large margin.
Absolutely.
An index fund is the easiest way to get access to the Indian stock market with low fees, and these are going to be companies you and I know. It's going to be a Reliance, HDFC, these kind of businesses, which are very safe businesses, generally speaking. So you will not lose money, your money will grow, and that will give you some confidence to look for other avenues.
Got it.
The worst thing you could do at the start of your career is start to invest directly into equities based on what people say.
Yeah.
You have to do your own work or rely on someone who's doing the work for you to be able to invest directly in companies.
Okay.
Because it's not just a matter of whether the company does well. It's a matter of what the expectations are, what kind of management is running the company. It's basically my job. So it's very tough. I've been doing this for 8 years, and every year I feel that I know less than I knew the last year.
Interesting.
Because any kid on the street can come and outperform me, and then I have to understand what did he see that I did not see.
Yeah.
It's a full-time job, and you have to give it to someone who's doing a full-time job, or you have to start doing some research on your own, largely in the field you are already working in. So if you're working in an IT company, if you're working in a bank, try to invest in companies you feel are doing something interesting, something
because
different,
you'll have a little bit more idea about exposure to those companies, right?
So this is called a circle of competence, right? Your circle of competence when you're working in an IT company includes which technologies are doing well, which company executes well. There you can make that call. But don't try to find the next big bank in India. Don't try to find the next big fintech company in India. It may work for you. For 99 out of 100 people, it's not going to work.
I mean, everyone just went to like Paytm ka stock kharida and everyone just tanked.
Yeah. So again,
it wasn't their field. It was just like the publicity that they did. It was all PR. People didn't realize that, right?
So see, it's a great company. It's doing well. The issue is where are the expectations? What kind of valuation it's coming at? Those are the kind of things which are very difficult to analyze from the outside reading a newspaper article. You have to build financial models and understand what kind of growth is built into the valuation of a stock and whether that is possible.
So if you can't do that, just simply invest in your circle of competence, as you said.
Yes.
The companies that you know in your own field are doing well or hiring well. An indication is also if they're hiring well, so that means they have some good funding and their stocks could go up, right? It's as simple as that.
Yeah. It could be any insight you have, but you have to start with an index fund or a mutual fund. And then when you want to do investing in direct equity, try to do it in your circle of competence.
When can you think of investing in a direct equity?
I think it depends on the risk appetite you have. See, it depends on how much risk you're willing to take.
Okay.
In India, I mean, a majority of the earning population is middle class. They will have some or the other responsibility at home. They may have a car, they may have an EMI.
Absolutely.
So you have to consider that there is a certain amount of money you can't lose.
Yeah.
So that money has to compound at a certain rate.
Correct.
When you have some extra money where you feel this is money, it's not like you don't mind losing it, but this is money which you can sit on for 20 years, and if it doesn't come to you, it's fine. Then you can take those calls. So it shouldn't be at the start. You should have a decent corpus, 6 to 7 months of your salary saved up in a mutual fund.
Correct.
Then you can start taking these calls.
Yeah.
Because I feel direct equity investment from the age of 35 to the age of 50, 60, that's going to make the real generational wealth for people. But you need to do it smartly.
Yeah. Don't just think that, start off with that. Have some fallback also, because again, you never
So
know.
there is risk capital.
Yeah.
Risk capital should be put there. But you should have, if you lose your job, you should have 6 months of your salary saved up.
I mean, my logic is that if you put directly into a market, be prepared that it might go to zero.
Sure. I mean, it depends on how you invest, but yes, it can.
It can, right? I mean, go with that mindset so that, as you said, the risk appetite is big over there, right? If I'm, say, investing a very small figure, but like if, say, a 5,000 or 10,000 rupees, it's a spare money for me, and I know that I can put it without thinking twice that, if it goes, it goes. But if it gets me big stuff, it gets me big stuff.
Yes, but I think that is a mindset which is very difficult to evolve, because there is a FOMO associated with this. When you read newspaper articles that the market is heading up, you try to do you take a lot more risk than you know.
Yeah.
And that's the issue. See, I'm an analyst. Whenever I tell people, I travel in cabs every day. Whenever I tell a cab driver, if he asks me what I do, at least twice a week, someone has opened a Demat account and given it to me. What should I do with this portfolio?
Interesting.
And I have seen what people buy and how much people are putting in, how much of their money people are putting in these stocks. And some of them are great, some of them are not so great. My issue is I always ask, how much of this do you actually have in your bank account or in a mutual fund? And the answer is generally none.
Interesting.
And that's where I'm finding a lot of issues, because the market will fluctuate. Long term, it will make you wealth. But if you buy it today, 1 year later, it could be 20% down.
Yeah.
You should not need that money then.
Correct.
It has to be safe for 10-15 years for you to make good wealth.
So the investment part is basically money that you don't immediately need.
You shouldn't immediately.
You shouldn't immediately. Okay, let's put it that way. You shouldn't
Yes.
need. Correct.
So what I do is, a friend of mine, he's a wealth manager. What you have to do some goal setting. Goal setting should not be that I'm investing in a mutual fund to go to a vacation. It should be that I am building generational wealth. Today, if you're sitting in India and if you have a degree in India and you're willing to work hard, there is no reason 25 to 30 years later you should not have enough money for 5-6 generations of your family. If you play your cards right.
Generations.
It's very simple. The amount of wealth being created in India right now is very high because our population is very high. The world population is not as high. They are declining. India is selling to the world. India is growing fast. If you play your cards right, you can really make generational wealth. The key to investing is to not make mistakes.
But you will make mistakes, right?
You have to minimize mistakes.
Minimize, yeah. I think minimize is a right way to put it, because there will be some mistakes in your investment.
So the investor I love most, his name is Charlie Munger. He recently passed away at the age of 98, I think. And he used to say that the best thing how to make the best money in the market is to avoid stupidity.
Yeah.
If you avoid stupidity, you will still make mistakes.
Yeah.
But you will avoid what most investors do. The market is a voting machine at the end of the day.
Yeah.
So you just have to say where the market votes. You just have to stay clear of the market voting you out of the market. Our parents' generations, etc., at that, when they were investing in the share market, as they call it, it used to be speculation. There was, scams. People were running up stocks because nothing was computerized. And then when it became computerized, it was very easy to manipulate. Every person I know who has asked me for advice above the age of 40 has shares of the same companies. I don't want to name those companies. They have shares of the same companies which IPO'd in 2007 to 2009. They bought those shares for 300, 400 rupees. Now they are 1, 2 rupees. Everyone has those because that was a market you want to invest. It's very, you have a fear of missing out. Those kind of mistakes have to be avoided. That is all. Being smart with your money means don't do stupid stuff with your money. It's very simple.
Perfect. So I think that makes sense for people investing in the share market, as our parents used to call it. You rightly put it that way. What are your thoughts on these alternate markets? Your blockchain, NFTs, the digital assets that people are investing into. Bitcoin going like $14,000 and all. What's your take on that?
See, it's an interesting space. The issue with this space is it's one, for an Indian investor, it's unregulated.
Correct.
There are very few legal ways to invest in these assets. The second is the veracity of the assets themselves. Are these assets worth investing in?
Yeah.
In some scenarios they can be. In some scenarios they can't. It depends on what your outlook is, how the world is going to move. Bitcoin is a very interesting concept. I was always very pro us. Again, this may become a bit heavy, but there was a gold standard before pre 1973. What the gold standard means is every currency note issued by a central bank is backed by gold.
Okay.
And it used to say it's a bearer check, so nobody did it, but you could go to the Reserve Bank of India or the Federal Bank in the United States, and they would give you gold in return for how much तुम्हारा जितने का भी note होता है.
Interesting.
And at the Bretton Woods conference, Richard Nixon actually changed this to not gold backed. And the thesis behind Bitcoin is that today's money is not backed by anything.
Correct.
It's backed by your trust in a government.
Yeah.
That this country is going to sustain, like the United States, which is basically all of the world's currency right now, is going to sustain its preeminence in the world. The currency is going to be a certain amount of value, because value is a very relative concept.
Correct.
Right? 150 years ago, the British pound was almost all of global trade.
Yeah.
And today it's not.
Correct.
So at that point, if you held GBP and if you open your Sone ka Pitara and you see it's only GBP, it's not going to be as worth valuable as much
right now,
as it was back then. So it's always a trade-off. What Bitcoin does is it solves the problem by technology instead of gold. It says there are going to be a limited number of Bitcoin in the world. They're going to come out mined slowly. You can mine them. And then the value is decided by the market. If there is more value being created in the world, the value of the Bitcoin will go up. If there is less value being created, the value of the Bitcoin will not go as much. The issue with this is that governments are not going to give up control of the currency.
Yeah.
And the technology behind Bitcoin is known. I mean, that's what blockchain is.
Right.
It's a known technology. It's a known quantity. But you have to get people to trust it more than they trust their government issued checks or the government issued notes, and eventually you need to use it to buy stuff. The guy
Yeah.
who's selling you stuff needs to accept it. It's a long road. It could happen, but it's a
Hmm.
long road. You are basically taking a hedge on the US dollar if you invest in Bitcoin or any other
So what's
cryptocurrencies.
your take? Should a person invest in it or not? And
I
what about
think,
NFTs?
see, NFTs is not an area I understand well, but from what I understand, it's largely speculative that certain NFTs will go up, certain NFTs will go down.
Again, it's a value concept, right? Someone,
Yeah,
it's art, and NFTs are art, right? So
yes.
it's a appreciator, an art appreciator saying that, okay,
Hmm.
this is a better art than the others, and this needs to be valued at higher cost.
Yeah, and that's largely it. Again, NFTs are not something I want to speak about too much because people get angry also, and I don't know much about that subject because I don't understand the basic value behind an NFT.
Yeah.
I understand the basic value behind Bitcoin.
And I don't understand either. I don't understand blockchain, neither do I understand NFT. I think it's just because I think you are more exposed to the regulations, and also maybe you have a better understanding of it. Me as a outsider, I don't understand it, and maybe that's why I don't value it.
Yeah, that could be the case. But see, I think everyone should be looking at these assets to understand what kind of changes are happening in the world.
Correct.
These are very interesting spaces to understand. Everyone should have an elemental understanding of what blockchain is or what cryptocurrency is and which cryptocurrency does what.
Hmm.
Every cryptocurrency is different. You need to understand what they do. It's a very interesting space to know. And then you make your investments on that basis. But again, this is risk capital. You're
Yeah.
basically hedging against the US dollar. If the
Hmm.
dollar goes down tomorrow,
Yeah.
and I mean down,
Like,
right?
down.
Dollar is finished because
Finished.
US debt is very high. All these type of doomsday scenarios I've been reading. If the dollar is finished, your Bitcoin is going up 10 times. That's the thesis, right? So then a percentage of your portfolio can be put there. Now that depends if you want to put 5, 10,
Hmm.
15. Personally, I put 5% of my portfolio in different cryptocurrencies up to 2021, I think.
Interesting.
But then now it's become impossible as an Indian to invest in
Yeah.
that. So I'm basically waiting for any regulation clarity on this, which is not going to come.
Very soon.
The government can stop you from
Yeah.
doing certain things in India and most countries in the world, and that they've done.
Yeah. Interesting. So one last thing, you did mention about a person having an Indian degree, and working over here, the Indian economy going up in say like 20, 30 years and other things. So what are your thoughts on if a person wants to study here or abroad and, making a living at either of these places?
So I think it depends on what your goal is. If your goal is to make a lot of money, if your goal is to understand what you're doing, there are different reasons people
Hmm.
study certain things. If you ask most people in India why you did a certain course, they will not really have an answer with respect to that course.
Hmm.
They will not say this interested me. They said this is the highest.
Correct.
This is the way I get the most money I can.
Yeah.
If you want a quality education in a niche category, or you want to be one of the top 50 people in your field, etc., India is not really the place for you to study, especially after your bachelor's. You have to
Okay.
go abroad, get into the best universities. The exposure they get you, the way they teach you, is not going to be matched in India, at least for the next 10 years. Some universities are trying it in India, but having that amount of faculty, the amount of connections, those quality of students and peer group, it's very difficult to do that.
I think the exposure also that these universities provide you with,
Yes.
the multicultural diversity that they have
Yes.
is better than Indian, colleges or, these universities give you. And also the curriculum, you did mention in the start about, the theory is not really updated.
Yeah.
So, I think, I've studied abroad. I did my master's, and, you've also researched about it. It's always better if you do it at the start. I don't think it makes sense after you, like, 5 to 6 years down in your work. I don't think it makes sense. What are your thoughts?
See, it depends. If you want to upskill to a level where, see, there's a lot of information in the public sphere today.
Right.
But for a lot of courses, very specialty parts of businesses, etc., you're doing, it's not really available for you. And that's why I'm seeing a lot of Indian companies, even startups, are sending their top leadership or founders abroad to do those executive courses, 2 months, 3 months, because they really grind you. They get meaning for you. They ask you questions which nobody else asks you. They ask you to do stuff nobody else asks you. There is good value to that. And if you want the best quality education, India is not the place for you after your bachelor degree for most people. With respect to working abroad versus working in India, it's a much more nuanced answer. If you want to have a 9 to 5 work life and have a car the first day you start your job, you want to have a family, you want to chill, great place, go abroad, don't stay in India. Because in India, your quality life is not going to be as good as there. The amount of your money you make at the start is going to be lower.
Yeah.
But if you want to hustle, if you want to create a lot of wealth, India is a great place to be. India today is sitting at income per capita income of $2,500.
Interesting.
We are moving towards $10,000.
Wow.
And that's when you create the most wealth.
Yeah.
If you look at countries like China, Indonesia, these countries, the amount of wealth they created, the amount of millionaires that sprung up during this period of time was the highest.
Mm-hmm.
But they did it at a much smaller population base.
Correct.
Today, China's population is high. It's not as high as India anymore. But India is going through this 2,500 to 10,000 transformation at a 1.4 billion population.
Yeah.
No other country has done this.
People keep forgetting the population aspect when the country is growing, right? It's so important.
It is very important because what is per capita? Per capita means $7,500 into your population is the
Yeah.
amount of wealth being created in India.
Absolutely.
And that number is huge.
Huge.
And if you want a piece of that, there are many ways to do it in India.
Yeah.
That's why investing in India. We are looking at certain technologies, we are looking at certain businesses, certain brands who can scale for the next 10, 15, 20 years. There's the Indian consumer, there's the Indian IT company, there's Indian manufacturing. Everywhere you look, there's opportunity in India. So if you're willing to hustle, if you want to start a business, if you want to be an investor into businesses, India is the place to be. Every foreign investor I met 6 years ago used to treat India as this is where you lose capital. Government changes regulations. You don't really make money. Now everyone I meet is how can I invest more in India? The markets are expensive, but how can I invest? They're still not stopping investing, are they?
Yeah.
The amount of capital which is going to flow into India over the next 10 years because of what India is doing and what other countries are not doing is going to be an amount which people don't realize is going to change the face of how India looks
in the next 10 years.
In the next 10 years. And this is not a 10-year phenomenon.
Yeah.
Next 10 years is something I can see. 20 years I can see, but it's not going to be the same amount of probabilistic determination I can make. It's going to be much longer term. I'm drawing a pie in the sky scenario. But 10 years I can see because the money is coming in now.
Yeah.
When people build capacities today, those are going to be used over the next 4, 5, 6 years. When they are utilized, then they build another capacity. So I have visibility for the next 5 to 10 years. And what I'm seeing in the Indian market or the Indian economy is that great changes are coming. If you, at the age of 40 or at the age of 35, are Indian who has invested his money smartly and is sitting on a few crores, there's no reason that should not be 100 times in the next 10 to 15 years.
That's an ambitious number, right?
It should be, right? Because that's the amount of wealth you can create. If you look at the number
it's about creation. You have to invest it to get that back, right?
You have to take a risk. But why have you saved this money otherwise?
Absolutely right.
Right? You don't put 2 crores in an FD. It doesn't even supplement your annual salary.
Yeah, true.
That money has to go to assets which are going to create good wealth for you. Some of them will fail, some of them will not fail. If you're starting your own business, you're taking a bet on yourself. Do what you like, do what you love.
Correct.
You will make money eventually. Even if you don't make money, you will learn some things and make money eventually. A failed entrepreneur is just someone who hasn't tried enough, right?
Yeah.
So that's where you have to be as an Indian. I think it's a great time to be in India. And if you want to or are willing to hustle, I think you'll make generational wealth here in the next 2 decades.
Interesting. An eye-opener for me also. Interesting. Thanks for that. Yeah, lovely chat and pretty good coffee. So yeah, I mean, hope you guys learned something from that. I did. And yeah, if you have any questions, Aman will be tagged in the read, so you can directly comment or message him or reach out to him on LinkedIn. I'm hoping he will be available to help.
No, I'm always available on LinkedIn. I like helping people get into especially the equity industry.
I think you will earn more if people invest, right? Yeah, so cool. Yeah, thanks for tuning in, guys. Take care. Cheers.